YouTube, hello. So, market recap today. Starting off with NASDAQ itself. I was talking about the Discord originally, looking for some kind of movement up here in the 830. If you've ever seen that, like, kind of set high of the week or anything like that, ended up not happening. Really, the backup alternative was for it to do pretty much this. By the time 830 rolls around, this is your manipulation phase to move lower, especially with this thick volume candle down here. That ends up being your tree candle model. Shoutouts to who knows who that is. After that, you get your delivery upwards with your market structure shift here. Order block holding with a BISI as well. So even if you were trying to short this, you do not want to see an FVG on your retracement in the opposite direction. Another order block at 9:30 again. Trades down into it. Another reaccumulation and then sets the high at 10:30. After the 11:15 macro, you end up rejecting this high and then breaking this low, so that's giving you a CSD down, allowing for you to sell this 15-minute order block for a failure swing / rejection block idea, carry it to a new low. Dow, pretty much the same thing. Kid you not, these drawings were here before we went to bed. Ended up trading down to this breaker here, really this one up close candle as well as these multiple down close preceding it, grabbing the internal the previous day, and really classic in Dow fashion. It did it on a CFD chart, but going previous day's high in terms of RTH to previous day's low, and then rallying back through. So at least for Friday, I would expect some type of continuation, and then either a deeper tracing back into like this breakaway, or even here to end off the week. As slightly ahead, I am looking for some type of movement down into a large CPI move to set high of the week next week and potentially high of the month, to then come down through and start doing some bearish seasonal tendency, especially through March. That's a little too out right now. Not really, but we do have tomorrow anyways. SPX itself, very sideways delivery. When you're looking from left to right and through a range, we have these consecutive down close here and then a movement up. Even when you're on this side of the curve, you really can't be bearish until this order block is taken. Yes, you roll over this failure swing at 10 o'clock and sink down, but it's really just a manipulation phase to trap everybody short, and then really just melting up against them as well. As even on, especially like on a 3-minute or even a 5, as you open up and you start rejecting lows as well as rejecting highs. Failure swings, highs getting rejected, failure swings getting swept, and then breaking the low. You have your market structure shift above this turtled high here. You can use that, or even once you trade back above this high that broke the low, that's what you can use as an indication. And even if you were trying to still short this reading left to right, the lows preceding it were rejected, giving you another indication that, okay, lows being rejected, highs broken. Same thing here. Just an internal run to proceed higher. So you can see the shift in terms of market profile and everything like that. Oil itself, the gig along of the century. Really just an LR. So we were talking previously about heading for this box based off of this box. Traded through it and then really just ran through all of this inefficiency in this LR fashion. Part of the reason it was even able to do that was because it was an LR through the range. It can allow for another LR through that exact same range. So easy pass through on this FEG, allowing for another easy pass through going through that same range. So now you can look to either rebalance it or anything like that, and potentially, the very minimum, come up to this like bearish order block, and then go from there in oil. But really, the stage was set, truthfully, since Monday. Again, thick volume candle breaking underneath a low. Run that, run the other end of the range. When, especially if you think you can place a target like that, when you go internal of that delivery, you can see the turtles all underneath here. Underneath failure swings, just more reaccumulations at the lows. Nothing was ever truly broke. And even going into New York today, turtles don't house liquidity. Just off that premise alone. So when you're diving, and really just an aggressive cliff dive, another thick volume candle idea, into London session, by the time you wake up here for New York, you have, again, small bodies, micro-sized bodies, all that means is accumulation. Like I said, it's never going to tell you accumulation longs to accumulation shorts. The narrative is going to tell you that. All the small bodies are going to tell you is accumulation. So in this case, it was accumulation for longs to confirm the break and retest and to keep going. And especially on like a 3-minute, you have your 8 o'clock open here. Market opens up, trades lower, especially after open outcry. Wicks down into the old order block here from this range here. Trades down into it, and then really just down close support. FVGs all day, the entire day. Even same thing here. This is just an internal run to wick people out to get them come back to the internal order block and then keep going. Because sell side was already delivered through here, this is as high as the sell side that is needed to rebalance the range. And I'll say that again. When you have this push upwards here, and then you have the sell side delivery here, this is offering the sell side ahead of time. So that by the time you break through that range, there's no need for the retracement there. It's the exact same idea here. You have the sell side delivery ahead of time. So when you're passing through that, there's no need to come back down into this. Notice how the bodies fully stop at this sell side here. And even the same thing here. You have the sell side ahead of time through the manipulation. That's balancing all of this range underneath here. So by the time it exits it, there's no need for it to actually retrace back into this. It's just coming down to the last of the sell side delivery to match it. So you have sell side delivery all the way up until the highest point, let's say this 74.90. You're going to get sell side only until the 74.90, and then it'll allow it to continue because all sell side underneath that price level has already been delivered. And that's what will allow to basically go and break it, retest / breaker for all those people. And even same thing here. One down close candle. Trades in it multiple times. Even this internal run here is just an R3 model. Just swipe out people that were chasing this long on breakout. Get them out because they're going to put their stop loss underneath the low that broke the high. They get swiped out. Keeps turtle souping. Keeps failure swinging. The down close candles really never broke at all today. It was just literally a moonshot of $2.50, almost $3 straight. Nothing stopped it. So, and again, even something like a really basic rule of turtles don't house, meaning even if you were thinking about shorting this, you don't want to pair it with a turtle soup, especially a recent one, like a bullish turtle soup in this case, because it's not going to house any liquidity. There's really no way. Eventually, yes, you can sell side back into this, but it's not going to be anytime soon, especially after a super aggressive Judas swing the other way. Very, very likely to set up just expansion and then just melting through, and then you're looking for that down close candle support all the way through, and again, it never broke it until 3 o'clock. Straight buy side delivery. So, as for tomorrow itself, ES or SPX pretty much tapped 5,000, so I am open. Kind of same thing on YM, just some type of move up to just kind of TGIF down through into this gap. And that'd be like a 25-point move. Or even if it wants to do the same thing, YM, come down for like that same Wednesday 8 o'clock range. 30 points, but very easily that could be a next week's type of target. Or it can just keep going. But what I didn't like in terms of setting up for tomorrow is, yes, these lows are all swept, but it is also setting up an LR in a way. So it depends on really time of day that we are hitting opposing liquidity and everything like that, and going from there. So, and then Euro, I mean, we saw it in the recap, pretty much same thing. You get a movement. We already have movement down through London, so by the time news comes in, that is your manipulation phase to allow for a move back through the other range. So literally what we were looking for as of yesterday for Euro. So you can pretty much continue the draw and see where you can go with, and then go from there at least to finish up the week. So very, very cool to see that. But the reads were definitely here today, just working on the execution. We will go from there, and I will see you guys in the next one.